A lot of folks don't plan at the investor level. They don't consider what the opportunity cost is of starting their ROBS. If your plan has been making you 10, 15% a year and you don't do anything with it, it'll probably continue to make you 10 to 15 a year.
Right.
So sometimes people will think, okay, well, if I use $250,000 today, in 10 years at 10%, that's gonna be worth 600,000. Can I sell this typewriter repair shop for 600,000 in 10 years? No.
Right.
You know, some businesses will never have the markup to
Ah,
make it make sense. Yeah. Now you may want to lose a few points of opportunity cost because you get to be your own boss for the later part of your life.
right.
But ultimately, this should still be a prudent financial decision.
Right.
So think about it first like an investor.
Uh-huh.
Uh, Once you're in it, in the ROBS, I've seen a lot of poor salary planning.
Ah, this is interesting.
So you need to take a salary for your efforts.
Absolutely. You must be a W-2 employee of
Yeah.
your business once you start earning revenues, especially.
So
you need a salary.
I'll see entrepreneurs who are afraid of the ROBS, so they don't pay themselves enough.
Right. Yes.
So now they're paying corporate taxes that they didn't necessarily need to, possibly.
Right. Because it's a money that the corporation has retained
Mm-hmm.
unnecessarily. Yeah.
I'll see bad service providers give bad advice and make them take distributions.
Oh,
Can't do that either.
really?
Yeah. You get a bad accountant who doesn't know what the C Corp's all about.
I think that they're like a pass through or something.
Well, if your C Corp was owned 100% by you, which is rare, but you could do it, you can take a dividend with retained earnings.
Sure.
So you'll get an S Corp tax accountant who gives S Corp advice in a C Corp.
Oh, and that doesn't fit.
And it doesn't fit. And so now we have prohibited transactions.
Right, of course. Yeah.
So you want to plan what a reasonable salary is, what it looks like. And there's not just tax planning involved in that. There's life planning as well. You know,
Right.
we want to talk about healthcare, life insurance, benefits to the officer. We want to consider their current age, the targeted age to retirement, and what they need to get there.
Right.
Right. That might be long-term care kind of services. It might be health insurance. You know, we want to look and diversify their salary
Yeah. Right.
with something that fits their life.
Yeah. So like I'm late middle age. I'm 59 years old, and my ROBS is new. I haven't paid myself a salary yet because I am pre-revenue. I'm busy working hard for the business by creating this website, but I haven't opened the doors yet, so to speak, coming August 1st. And when I do, and I'll start paying myself as soon as I have any money to do that with. Right now, all of my ROBS money is going towards web design, copyright attorney, marketing services, software infrastructure. So, but since I'm older, when I do start paying myself, I'll be happy to consider and will consider seriously benefits in addition to a cash salary, benefits that will protect me at my stage in life.
Mm-hmm.
Things, I mean, I already have life insurance, but I don't have any long-term care insurance. Is that something I want?
Mm-hmm. And there are lots of things in the benefits world that C Corps have, like HSAs, medical reimbursement arrangements, things like that.
There you go.
You know, so everyone's circumstances are going to be different.
Right, true.
But in terms of salary and tax planning, you'll get accountants who unfortunately will say, hey, reimburse yourself for your home office, reimburse yourself for your automobile, reimburse yourself for this, that, and the next thing.
Yeah.
And these are all prohibited.
Right.
In a sense.
Corporation.
Yeah. We don't want to do any of that.
Right.
And it always reminds me of that, I don't know what it's called, that snake that eats its own tail.
Oh, right.
Because if your C Corp is growing the equity of your nest egg, let's say 10% a year, and you take several thousand out to reimburse yourself for your home, office, your car, you're just removing the equity growth.
Right.
You're not getting a tax break.
It's like taking the air out of your tires and you're trying to ride the bike when you're, retired. It's like, well, if the bike has no air in its tires because you've been leaking it for, leaking the funds.
Let's not reimburse ourselves for our phones for a few $100 and a few pennies in tax deductions. Right. And instead put those dollars back in the plan. That's the best tax deduction you're gonna get.
Yeah, that's right. That's a really good that's a really good idea. Is you're safeguarding your plan asset carefully.
And then tax planning. We want to talk today about when we're selling this thing, what that's gonna look like.
Right.
Okay. We don't want to figure out what it looks like to sell our business 3 weeks before we're going to sell
Jiminy
it.
crickets, you tell me I have to start planning that now?
That's right.
I have not given this any thought.
That's right.
Good people.
So
Have you?
in 24 months, you're going to achieve that proof of concept, that point where this thing works.
Yeah,
That's when we want to have that first important discussion.
okay.
We
Yeah.
can talk all day, like you're going to be a gazillionaire tomorrow, right?
It's all theoretical.
It's all
right?
theoretical.
So when I have to, of course, work really hard and spend my efforts to make it successful
Mhm.
and prove my very simple concept. And then, just keep doing that same thing well as I can. And then plan whenever it might be that I would exit this thing, which I haven't given any thought to whatsoever.
We're always going to look back to the plan. We're going to shovel money into that plan. And sometimes your business can scale and grow to a level of profitableness where we do want to pay C Corp taxes because we want to put, in theory, an unlimited amount of dividends back into our retirement account.
Right.
If you have profits that you pay C Corp taxes on, it's very likely that you have enough earnings and profits to pay dividends to the shareholders.
Mhm.
And this is a unique feature exclusive to the ROBS. You can't do this with any other kind of vehicle.
Right, C corporations can pay dividends, which is cash return in while the company's operating on the investment, a cash return on the stock investment while the company is still in existence and still operating.
So if your plan owns, say, half of your business or all of your business, and you
Right.
declare a dividend of 100,000 after-tax dollars, you put all that back into your retirement account.
Yeah, it's awesome.
So, when we look at this and we think, C Corp, double taxation, it's not necessarily always going to lead to double taxation at all.
Right.
In fact, you may leverage a Roth conversion to find yourself in one layer of taxation in perpetuity.
Right.
Right.
What are those few things that you do every year that I will be doing every year as a ROBS owner to get my books in order, so to speak, my house in order for you to prepare my tax return?
That's a great question. You want to annoy your CPA after October 15th.
Okay.
And say, let's get on the calendar and let's do some advising. Let's talk about year-end stuff.
Okay.
Before you get to that meeting, you want to make sure you have bookkeeping solutions that are in place. There's not a lot of value add to trying to do your own bookkeeping for a couple of reasons.
Okay.
One, if you're spending hours doing QuickBooks, you are not spending hours hustling.
Right.
You're not growing the business.
Right.
But the other important thing is that C corporations, there is unique accounting treatments for equity, income, expenses, assets, and liabilities. Like we have capitalization rules. We have balance sheet considerations. There are things on a set of C Corp books that are different.
So like the or what's that called? In QuickBooks, you have the chart of accounts.
That's right.
And it's different from my law firm, which is a PLLC versus a C Corp.
Right.
That chart of accounts will be different in QuickBooks. I actually don't have QuickBooks set up yet at all for my ROBS. I have a spreadsheet.
Don't say that. No.
But I will get QuickBooks.
We got you covered.
Yeah,
we got you covered.
Ryan will help me.
We got you.
But it's true. It's like I've only just started my ROBS corporation. I've kept track of my expenses and I've kept them very much segregated from my law firm and from my personal finances because the C corporation is a separate entity. And I honor that. It's a sacred, separate entity. Sacred because it's owned by my plan.
Bookkeeping solutions, there are a few reasons we need them.
Okay.
First and foremost is it's tax season and you have a tax return coming up and the previous year that we're concerned about has activity in it.
Right.
You sold things, you bought stuff, like money moved.
Right.
Okay.
Yes.
We'll get a lot of clients who might start the ROBS in Q4 and maybe just a capital investment in. Maybe they spend a few bucks at Office Depot. If it's a minimal amount of transactions by the year end, you may not need a real double entry accounting system just yet.
Right.
But as soon as sales start coming in, as soon as your doors have opened, you need a bookkeeping solution.
Darn it, I wanted to put that off, but I do have to get that going. Okay.
So another reason you need bookkeeping is you have a franchise brand that you have to report to regularly.
Oh, yes.
They want books.
Of course.
They'll have a chart of accounts too. They'll want your books to look a certain way. And so that's why you want a good bookkeeper like us to help you build that. Otherwise, the other reason is that money's coming in and we want to quantify it. So a lot of businesses might have like 12, 15, 18 months before they even care about QuickBooks because like they're building out the building and they're getting permits and like money's going
You're
out.
like, money, what money? I don't have any
Right.
money. Yeah.
But if you're opening your doors and you have sales, we gotta get a double entry accounting system in place. Don't try to do this yourself and don't try to do it with an Excel sheet or
No, I would never do that.
you know.
No, what I'm gonna give you is a list of my expenses and
Sure.
a bank statement.
So ultimately you want a double entry accounting system, which is more necessary in a C corp than a pass through.
Okay,
I've done accounting and taxes for years, and I've filed many a tax return for pass through businesses. And ultimately, we don't care as much about the balance sheet. If you give me all your income and expenses, everything by default is going to be a distribution.
right,
Money you took out and gave to yourself.
right.
But we don't have that fundamental opportunity in a C corp. We have to account for every penny because it's all a function of common stock. There's no distribution account. There's no junk drawer. Like,
Ah,
oh, what did the client do here? They
ah.
bought their own cigars and haircuts
So every penny has to be categorized.
in a double entry accounting. So when January rolls around, your C corp returns due in April. You should be spending that first year post activity when you've triggered one of these reasons, right? Need a tax return, got volume, got activity. Bookkeeping solutions come first. Put the return on extension. That can
Oh,
wait.
right, okay.
We want to spend that Q1, Q2 getting it right
Oh,
the
that's
first
interesting.
time.
Okay, okay.
Okay, bookkeeping has got to get
Yeah.
done right. Your bookkeeping is the foundation of the house. If you miss a few bricks to put in, the house is
Yeah,
going to
it's
lean
gonna
over and fall down.
Yeah, okay.
You
gotcha,
know,
gotcha.
it comes first. It really does. And towards year end, before you get into the tax season, you also want to review your payroll.
Okay,
Okay, if you have a payroll provider you've set up yourself, make sure that they are checking off the right boxes. The payroll provider knows there's a qualified retirement plan
uh,
on the, it shows up on your W-2s. It's very easy also for you to have W-2 reportable items that you're paying for day to day in your business that you didn't tell anything to your payroll provider about. So let's say your business is paying for your family's health insurance.
oh, right,
Well, that
okay.
goes on the W-2, but the business might be paying for it directly.
Oh, right.
But you still got to compute how much that is and get it on your payroll.
Right, of course, because it's an individual
Right.
benefit.
So you want to make sure that you're reviewing your payroll records before you get to 12/31
Oh, interesting.
and you're
Okay.
capturing all the right data. Pre-year end, we're looking at making sure payroll's set up correctly. We're looking to make sure that the books tell us how much you're going to make. And then we can use that data to say, okay, well, how much does Dahl need in a bonus to get
Right.
to year end? So as your profits grow, so should your salary, benefits, and retirement contributions.
Right, because that's all tax favored. Well, I mean,
Right.
salary is.
It's all deductions to the C corp.
Oh, but yeah, deductions to C corp, so that's a tax benefit to the C corp, and then as an individual, some of it's tax benefit to the individual as well.
Right. And before
Benefits.
year end is your opportunity to cut those paychecks. Right. If you're a cash
Yeah.
basis taxpayer, you have to pay your bonus before the year ends.
I see, so by 12/31,
Mhm.
okay,
So if you're an accrual basis taxpayer, you have to demonstrate the intent before year ends to pay the bonus.
okay,
So that means getting your lawyer, getting the minutes updated, having a board meeting in December,
Jiminy.
saying,
Okay,
hey, we're going to pay a salary for Q4 and Q1,
okay,
right? So there's some year-end considerations that have to do with your salary. Books tell us how much we make and therefore how much we have available to pay in those salaries and bonuses.
right, right,
All right. And so then post year end, we're talking January, February, March, the eve of tax prep.
yeah,
Now now we want to close our books through 12/31. We want to make sure all of our accounts are reconciled. If you have an outside bookkeeper, you really need to assess their skill level. If you're not doing bank reconciliations, but you're
Right.
doing your own bookkeeping, you're not doing any bookkeeping.
yeah,
It's best to just avoid the headache of trying to be your own bookkeeper
Sure,
completely. So you want to make sure your bookkeeper has closed their year in January, and then they do not touch the financials anymore.
anymore, okay,
The C corp tax return is this grand reconciliation, okay, where it is computing the final liability for that year, and it is going to take quarterly tax payments, which are assets,
yeah,
and convert them into tax expenses.
okay.
That's all a bunch of accounting lingo. I'm sure I lost half the room when I
Right,
said that.
right, but yeah, I see what you're saying, it's like, that's where your
When you're
everything comes the final
It's the
point.
final point. It's the conclusion of the year is the tax return. You can't
Okay.
close a set of books for a year ultimately without the tax return.
Gotcha.
So what a bookkeeper might do is they'll hand us books in January and February, and then we'll say, okay, well, we're gonna file this in July. And then in June, they change all the numbers.
Oh, my goodness.
They go into the last year and they go, oh, I got invoices, and they modify it all.
Oh my God.
So you got to get your books ready in the beginning of a year, and then you got to get your bookkeeper to lock it down and say, I'm not changing
So
it.
don't delay reporting invoices
Right.
and depositing checks and whatever else happens with your money
There
in
are
your business.
there are plenty of year-end and post-year-end internet checklists that bookkeepers give out for free, like the things you should be doing.
Right.
Right. Close your books for the year, lock them down, give them to your CPA. Your CPA gives you the final tax return for the year and adjusting journal entries.
Okay.
And if you must have an outside bookkeeper, they must know that quarterly tax payments are not expenses. They're
Okay.
assets.
Okay.
We turn them into expenses when we file your return.
Okay, yeah.
So take your time filing the return. Get the
Okay.
foundations in place. Get the books solid.
Right.
Make
right.
sure your bookkeeper knows C Corp. Things like that.
Oh, definitely. No, I would be hiring Baum CPAs for all of the above.
Many a business owner has a vision for their future, and a lot of that vision is predicated upon profits that they envision. So I'm going to grow my location into location 2 and 3 and 4 and 5.
Right.
Growth and revenue and capacity are not two lines that parallel one another. It looks more like a staircase. If your IRA has let's say a 200,000 in it, and you want to start a business, don't buy 3 franchise licenses.
Even though they're cheap enough to pay for with the 200,000,
Right.
that's not really the total expense. It's obviously much more.
Overextending resources can happen in a ton of ways.
Right.
You can buy too much inventory. You can buy too many vehicles. Right.
Or lease to larger property, like an unnecessarily expensive premises.
What you need to do is find a very precise thing that makes money, proof of concept, whatever that is. It could be, it can look different for everybody.
Right.
And you need to whittle that down to making it a fine-tuned machine of these are the 10 expenses I have and the one customer that make me money. You have to simplify that equation right down to its barest minimum.
Right.
And prove that that little thing makes money, and then scale from there.
Okay.
Because you got one shot at starting a business with your retirement money.
Yeah.
You got one shot at it.
Right.
And so if you overextend your resources, it can be because you're thinking about year 4, year 5, you're applying your resources towards a vision, but you're 2 steps ahead of yourself.
You're skipping
ahead.
the important steps of having money to finance that growth.
One business.
Very interesting.
One business, one retirement plan. Don't start 2 or 3 ventures simultaneously. I will see constantly, I want to start a ROBS to open a consulting firm, which is going to, have a real estate in it. And also my wife's a doctor, and like all this stuff's
Like
going
an empire.
we can get there.
Yeah, eventually.
But the reality is most people don't.
Right.
Most people run one business, it makes some money, they live comfortably off of it, they grow it, they sell it, they retire. That's 99% of us.
And that works.
That works.
Yeah.
It really does.
Yeah.
So if we're serial entrepreneurs, have a vision for one thing that makes sense, scale it, grow it, sell it, start again, wash, rinse, repeat. Don't try to run 2 businesses at the same time.
It's very interesting.
A business is going to be a full-time job plus. It really is.
But it is.
It is. Get a thing, keep it simple, make it work, make it make you money. And then when you have a pile of money laying around you didn't have previously, that's when we start to ponder what number 2 is or whatever.